You ready to start this, dude? You can
Let's.
actually screen share. I do have your chart. So while Bob is getting set up, you guys, if you don't know, so Bob and I have actually, I want to say a year now.
Oh, at least, dude. Yeah, it's been
Yeah,
at least.
met at least a year ago. So I'm actually, when I came into Discord, it was a super young environment.
Mm,
And the first couple people that I ran into, well, I realized that the generation of traders were very young.
mhm,
And the first couple of people I ran into, one was Brian, who did that momentum and volume
mhm,
webinar with you guys, and then Bob was actually the second, and then there was Penny also, who
mhm,
she's a penny stock trader. Really, she had a pretty big following, but a
mhm.
different kind of click. And I like these guys because they're all, I mean, Bob Bob and his brother and a guy named Jerry, who I'm a big fan of. The three of them run this company called Money Vikings, and you guys can check out their website. It's moneyvikings.com, I believe.
Yep.
And the trifecta of those three guys was something pretty unique to me. When I first talked to you, Bob, do you remember our first conversation?
Dude, we were talking about just the. um, I know we were talking about trying to get together and collaborating because you had a different approach to options trading, and you'd seen what Jerry was doing, kind of more up your alley. And we were talking about how to kind of broaden our exposure to a market of people to share information. So yeah, it was a while ago.
We clicked right
We
away.
clicked right away.
And what I remember for sure, I mean, I was like in the car, and I'm like, wait a
I
second,
remember, yeah,
I need to pull over because this is actually a pretty cool conversation.
a lot of commonality.
Yeah, but like when Bob and I first started talking, it wasn't just about trading, right? It was
Right.
actually, and what I liked about you guys is that it's all about financial freedom, the
Yes.
in its entirety, right? It's
Mhm.
not just trading. It's very much real estate. It's very much retirement stuff. We were talking, I think the first thing was like, 401ks versus Roth
Mhm.
IRAs, right? And like,
Mhm.
I actually hate 401ks. If you guys didn't know, I feel like it's like the biggest scam. But like, they're good as long as you can get a company to match. You can also, and we were talking about, well, how do for us, it's different, right? Like, we need to build. It's all about building that generational wealth.
Mhm.
And last week, Ace had actually talked about it too, right? Like, where for me and Ace, it's almost like trading is more of a pastime, if that makes sense, right? Because we're
Yeah.
very, very much diversified, and you guys do a ton of the same. But little things like rolling over a 401k to a Roth, because at a certain point, like, you can't even contribute to a 401k. I don't know if you
Yeah.
guys knew that, but like, I found out because I was penalized the first time I was not allowed to contribute to a
Right.
401k, or to a Roth, sorry, which was like infuriating. And I'm
Yeah.
like, oh God. But anyways, yeah, talk to us a little bit about what's going on with Money Vikings. What's the journey with? I know you guys used to run a podcast, which I think that's how I
Yeah.
ran across you initially. But the whole trifecta of the three you guys are kind of evolving. So catch
Yeah.
us up if you can.
So, just short background is that I've been investing for over 20 years. Same with my brother and Jerry. Um, it's everything from real estate, collectibles, all the way stock market and whatnot. Um, it, it wasn't until probably about 3 or 4 years ago that I actually got into trading, and with that came charting and recognizing patterns. I've always had this knack for being able to see patterns, numbers, and whatnot, and so it was really appealing to me. Back in probably about around the same time, 3 or 4 years ago, my brother and Jerry had started a blog. It was the Money Vikings, and it really was initially off of the FIRE movement. If those are familiar, it's financial independence, retire early, right? It's the belief
Legitimately,
that
that's the first time I've heard that.
really
Yeah, fire
fire,
movement. I
fire,
like that.
yeah,
All right.
financial independence, retire early. So there are people out there that take this to an extreme level, like you're talking about, recycling everything they have, only buying at thrift stores and used items, and uh, really, it's really tight. And you have people that essentially, to the standard of retiring at like 30, 35 years old, young
Yeah.
ages, right? But it's it's to everybody's tolerance. What's your reality, right? What is it that you want to have? Do you want to be comfortable where you can travel, where you can actually splurge on things occasionally and whatnot, right? So they started out in that path, but then they realized there is a variation of that, because that isn't necessarily the lifestyle everybody wants. Um, and it's kind of like a new and approved approach to it, to allow people to have the lifestyle they want and how you get there, right? So they eventually started going in the path of doing podcasts, and a year or so after that, they tapped into their good old brother Bob, and and because I was very heavy in the community and I was doing a lot of charting and whatnot, and um so I jumped on as the personality, and and it just kind of, it blossomed from there, and became a business. We started down a path of essentially trying to be the next Nerd Wallet. We wanted to have a single place where everybody could come to for the best information about everything relating to investment, right? Um, so Jason, we don't have to necessarily do this deck thing. It's fine. I can
No,
just
yeah, I
talk.
don't,
It's
I don't
totally
know.
fine.
Like you had some cool, I mean, you got some pretty cool animation for sure. But so, I, I think what was intriguing to me about your story right now, right? And we were, chatting back and forth. So you'd mentioned, did you, so what's the status today with full-time trading versus full-time
Ah,
W-2?
yeah. So this is the new development. So let me preface by saying that um, I've been to people's standards been wealthy for some years now,
Sure.
and um, there is the psychology, and this is kind of goes and is going to be feeding into what we're talking about today. There is a psychology, there's a thing that people have where there's a barrier that will prevent them from taking a step into the world of full-time trading. From a very young age, we are all kind of taught like, hey, you get a job, you work really hard, you work your way up the ranks, you put your money in a 401k, and you retire. And then that retirement feeds you, right? You
Right.
you put your money in the stock market and you let it sit and you let it ride. Very, very Warren Buffett style type of thing. And it teaches people to, in a way, to be worker bees, right? Because we need worker bees. Um, so up until recently, and then especially after talking with Jason, it kind of made me realize, light bulb, is that I can do this, right? And so as of last week, I essentially retired from working.
Dude,
Right? Yeah,
Gary, it's a big step, man.
it is, man. It really is.
It's
It really
huge.
is. You kind of shake at night. I rock myself in the corner sometimes, you know. But it's here's the thing, is that I had made a commitment when I was going to retire that half of my overall wealth was going to be donated to a charity of choice. I have 3 kids, special needs, and so it's near and dear to my heart to kind of take care of people's special needs.
Oh, that's
And
awesome, man.
yeah, and so and that is specifically why I did this. I took this step, was because I wanted to have that freedom in my life to be able to be there for my kids and not be stuck at a 9 to 5 job, letting their development and growth pass me by.
Yeah, yeah.
Um, Stress is a real thing, right? I think we all feel it at work.
That's funny. I
And
actually
yeah,
super similar. Well, I mean, my dad actually got sick,
yeah,
and it wasn't until what was in the passing, right? Like in his passing, that I left work, and eventually, and I just never came back, right? Because
yeah,
and it was so similar. It was like, it's not that it was multiple things. One, we were doing so well, it didn't make sense to go back to work.
right,
Two, you know, it was very clear that, I was so grateful to be able to have the opportunity to
yeah,
have a job, even at the time, that would enable me to essentially work from home, or be with him,
yeah,
while he was passing, etc.
yeah,
But um, when it was all said and done, I'm like, dude, I just like my whole life, it was almost like I lived to work. I didn't
Yeah.
work to live.
Yes.
And I'm like, dude, that's that's
And
backwards.
that is, and that is
Backwards.
exactly the thinking that we are all kind of we're trained, right, to think is that you are constantly working to, to try to just make it by, but you're told that that is your life. Like you are meant to do something at an organization or company, and it's like, no, I shouldn't.
Yeah, and everything
Yeah.
you build. I mean, I thought I was retiring too, by the way, but I
Yeah.
think
Right.
I work just as much, maybe
Yeah.
more now than I did before.
Glutton
But
for punishment, right? I mean,
yeah, but at least
better
it's for
cause.
myself, right?
Yeah.
And
Exactly.
what's funny is like we've been talking about this for a while, and I remember when we first met, your trading style was also a little bit more retail in terms of
Hmm.
like, you know, very much, the investment mentality, right? Like
Right.
trading psychology to our topic really today
Yep.
is very, very different than what we're taught as, when we're growing up, right?
Right.
Like we're taught, like you were saying, put it away and it'll eventually get there, right? Like it'll
Right.
eventually, um, feed your retirement. And
Right.
that's not wrong. I'll just say it's not wrong. But trading for a living, you can't invest and
Right.
make a daily, monthly living, right?
Right.
It does not work that way,
Right.
right? It's not compatible. And turning that mindset off is
Hmm.
probably the one of the most difficult things I see for new traders in general,
Yes.
right?
Yep.
And so I saw your transition change, right? Like
Yeah.
I don't want I'm only taking, this one small baby move out of a much larger move
Yes.
from like trying to capture the entire move. Either not even just, do we want to buy the bottom, right? No, I mean, I don't think you're ever like that. But it was more like things can continually go up because we've been in this decades long bull market,
Yeah.
right,
Yeah.
for so long. And I think at this point it's a lot more prevalent. Like, okay, well, it's not always stocks go up, right? Sometimes
Yeah.
stocks go down. But
This
yeah,
this will
well,
be, to that point, this will be the first time that many retail investors are experiencing a bear market,
yeah, yeah,
right?
for
So
sure.
that's a key thing right there, is because um, we have a wave of investors that came in born out of a pandemic, right? And this is where Wall Street Bets and Stonks and HODL and all these things came out of, and you know um, to have people come into this thinking that that's all it is naive, right? And we want people to have a real understanding. I've been through quite a few pullbacks in the market, and
Yep.
recessions and crashes in my lifetime. I've seen the worst of it, and um, we're getting there. So I want so Benjamin Graham. This is one of my this guy's brilliant. If you guys can see this, he's
Yeah, this is like was this Intelligent Investor? Is that right?
yeah,
Yeah,
yep. And
that's one of the
so
staple. If you guys aren't
staple
aware of,
books.
yeah, that's probably like all the way up there in the like original curriculum
Yeah,
of investing 101.
101,
Really,
right?
yeah,
This is the guy. This is it. And so I wanted to put this quote up because in particular it's talking about the mindset changing from investing to trading, right? So most of the time common stocks are subject to irrational and excessive price fluctuation in both directions as a consequence of the ingrained tendency of most people to speculate or gamble, to give away hope to fear, or give away to hope, fear, and greed. So what essentially is that um, uh, people are willing in the stock market to kind of brush aside their better senses and gamble, and
yeah,
then react, right? FOMO and all these
especially with
things,
options.
right? Especially with options, FOMO and,
Yeah,
and hopium, right? The two drugs that people will react off of, and they don't kind of take in consideration that um, you need to be in control here. This
yeah,
is this is this is the big thing, is that it's not about beating the system. It's about being in control of yourself, right? In your own game.
for sure.
So I wanted to just briefly touch on real quick was that just talking about like we're talking about investing and trading and running, right? So a lot of times people don't think about that we need to invest in ourselves, right? We need to invest in things. It's not just the stock market. So when we're doing trading and we're making money, we're making a mindset and a shift and a change, we're also investing in ourselves, in our well-being, our mindset, our health, our stability, our comfort,
Yeah.
investing in relationships, right? So just think about that, right? We think about investing and trading as the stock market. You're also investing and trading in life, right? It's the big game. So I just point that out. So if you want to jump over to the next slide, this is an extreme simplification of the stock market, all right?
You have some
So
really pretty slides, by the way.
oh, thanks. Just like my charts, right? Very pretty
Yeah,
charts.
yeah, very pretty.
So you know, this is an extreme simplification of the stock market. Ray Dalio, you probably, you guys heard
Yeah,
about. This is
yeah.
kind of
Actually,
like
that is probably my favorite book of
mhm.
all time.
The guy is brilliant. He really is.
Principles, right? So the
Mhm,
book is Principles by Ray Dalio. I
mhm.
mean, not just trading, yes, investing,
But he makes sense.
life in general,
Yeah.
right? Like, I mean,
So
yeah,
this is kind
best
of
book hands
it's
down for
yeah.
everything.
It is no, absolutely,
Like,
absolutely. And
you should see my copy. It's like marked up like great. It looks like a text. It looks like a legit textbook.
yeah.
Like if you see my
And
copy.
for people that don't want to read, hey, look on YouTube. He has his whole series up there. It's great. So Ray
Yeah,
Dalio. But this is kind of a kind of refinement of his little symbol, right? But it's a simplification of the market. It's the ebb and flow. It's the ups and downs of the market, right?
yeah,
So yes, the market, if you look at it over prolonged periods of time, if you jump to the next slide, you'll see that this is the S&P 500. This is the index on a monthly scale since inception, right?
yeah,
1872. And so we can identify that
yeah. 1872. All right.
1872
Yeah.
trading wampum and wheat, but you can see that it's the ebb and flow. There is a directionality. There is moments of cool off. So the prior, I drew these red kind of descending trend lines.
Dude,
To have
I've
you guys,
never looked at this long of a chart.
yeah. So
This looks very extended, actually.
right. So those three,
Scary.
those prior three,
Oops.
um, except for the most recent one, the prior three are actually parallel,
This,
perfectly
this,
parallel.
this. One,
Hmm.
two, three.
No,
Yeah.
the first three,
Which
left to right. So
one,
that one,
two,
two,
three.
three,
Oh yeah, got it.
those
Same
are
angles.
perfectly parallel. They've just been copy and pasted, and the trend it it
Interesting.
it repeats itself. So
Yeah,
my big thing is predictable, repeatable patterns, right? That is something that stays near and dear to heart for me, is that predictable, repeatable patterns.
yeah.
When you can see a trend, you recognize how to play it, right?
This is funny. Look at this. This is 1920s, Roaring
Hmm.
20s, right here.
Hmm.
Right. Boom,
Yep.
boom, and then Great
Yep.
Depression.
Yep.
Boom, boom.
Dust Bowl. Yep.
Yeah.
Walk our way out of it.
Wild.
Yeah. And so we can see in time over prolonged periods of time, the market, right? S&P is essentially the lungs of the world when it comes to the market, right? The market reacts off the S&P 500.
Yeah. Look at this though.
So
1928. This
mhm,
is the high, and it didn't really recover until 30 years later.
yes. So
That's
these are
like a whole
recessions.
generations.
These are recessions, right?
Yeah.
And
Crazy.
so when we look at a recession, you do trading we're doing on a very minuscule finite scale of time, and we can't forget to step out, right? Jason, you do a great job of this, stepping out, looking at the bigger picture, because it can help us understand why something is happening or is going to happen that maybe is total opposite of what should be happening, right?
Yeah.
It's the bigger picture. So this is key. This is key to understand, especially when you look at the S&P 500, because it will control a lot of these other stocks out there.
Yeah,
As the
this is
market
always
reacts.
like for any major or anyone who's excuse me, trying to make a profession out of this, right? Like
Right.
this has to be a chart that is always in your purview.
Yep.
I'd say if you're not
Absolutely.
looking at it daily, I mean, yeah, this is the overall trend.
And if you jump over to the next slide, and the reason why I did two different variations here is because And if you can toggle back and forth between the two, but you can recognize that there is a trend. There's multiple trends that get recognized on the yellow uptrend. So if you go back to the other one, the market respects both. Very slight tilting of a trend, but the
Mhm.
market will respect both. And as we come into more current day and age, a couple things to remember. Most of the trading that happens in the market actually happens pre-market and after hours, right? We're talking about billions and billions of dollars that actually get traded in dark pools and
Yeah.
overseas pre-market and after hours. The intraday trading is where they get to take advantage of retail money. I mean, that's really what it comes down to. They're just playing
Yep.
games, right?
Yeah.
And so the other thing is that back in the late, the 80s, early 90s, computers were introduced. I talk a lot about algorithmic trading
Yeah.
and
This is when I
algos.
was born, right here.
Right there, man.
Right
You
there.
caused the market to rip, dude. Look at you.
Yes,
Look at you.
I
Man,
have
thank you.
arrived.
Thank you for your existence. Um, so
This is 1970s. This is actually right here. This is what a lot of people are talking about. We could be. This is stagflation.
yeah.
Interestingly, yeah.
So we're looking at a repeat. Patterns repeat themselves over time, right?
Yep.
And so this is where we are looking at this play out. And granted, this is a monthly chart. If you dive into a daily chart or weekly chart, you'll actually recognize some breakdown patterns that are occurring. And this is just a natural. We look at the market as like a pulse, a living thing. All right, it's breathing. It's up
Yeah.
and down, in and out, right? And we need this. You need this balance because it's further than just trading, right? We're talking about um, nations having power and money, right, and wealth. The dollar is the most important thing out there. It keeps us as a global dominance. So as long as we keep the dollar powerful, everything else falls in line. So this means that commodities, manufacturing, different things are components of this, right? So this is why we need these ebb and flow things happening. Prevents it, having a global dictatorship. So we keep balance, right?
Yeah.
So yeah, the pattern that is starting to repeat itself right now is something that we have seen before. So we are seeing it kind of go down. We should expect the market to, at some level, bounce. It creates a euphoria. We think that, okay, we're done, we're out of this, clean and clear. People start jumping in, but it's just it's a breath. The market's taking a breath. It's going to do it again. These recessions draw out over the course of years, right? Market depressions draw out over a decade or two, right? So we're going to go through a recession. We'll have a period of time where we're going to bounce, we're going to go up, and then we're going to go back down again, right?
Yeah.
To hit a newer low.
I actually have
Um,
I have a
yeah.
PDF, I think, from one of my buddies who is out of hedge fund crap. I can't remember. Oak Tree
Yeah.
Capital Management. Yeah, it's Anatomy of a Rally.
Yeah.
But yeah, it's actually I could bring it. Super funny. It's very much like exactly what you're talking about. Like there are very specific stages, right? Here, if you're missing out, right? This is what
Yes.
happens, right? We could just read the bold. But yeah, it's so I can send this to you guys later.
Yeah, I'd love to see that because it's exactly it. You can
Yeah,
so
it's literally
here's
titled "The Anatomy of a Rally," right?
and this is furthermore the psychology of it too, right?
Yep,
Because
very much.
you got to understand is that they recognize, there is a lot of psychology that goes into this stuff. Knowing how to anticipate how the general public is going to react to something, right?
Yeah,
And so when you have large gobs of money that ultimately have the power to move the stock market, and I know a lot of us like to think this, but no, You or I do not have that power. We're
Yeah.
we're talking about people with trillions of, it's banks, right? Trillions of dollars in assets, multi-billionaires, right? Who have the power to actually do something. The Elon Musks of the world, right?
Yep.
Um,
It is, right?
that's what we're talking about. So I like to put it that we are just the fly on the back of a rhino charging, right? So we're here to take advantage of what that rhino is doing. If it's stopping or if it's charging, I want to be on the back of that. I'm not going to think that I have enough money to throw at an options trade or a stock to move it in any given direction. Though at some point in life I'd like to be, but hey, I don't think it's gonna be tomorrow.
Yeah. So
Um,
like, so essentially just recognizing, hey, I am just a little speck of sand, right,
right,
in this
right,
much larger ocean that's moving. And my
absolutely.
job is just to take a portion and
Hmm.
just a small portion of what the big guys are already doing,
Absolutely,
right? And
absolutely.
that's it, right? And so if they're doing this kind of pullback or the selling, right? I think this is your next slide,
Yep,
right?
yep,
Yeah, like I don't need to short here or here, although we can, but it's harder to recognize that kind of stuff. But
right.
if you're just in this one little, where's my annotation tools,
Noted.
right? Like if we're just taking this little small sliver
Hmm.
right there, that's a trader,
Yeah,
right? Like we're
yeah.
not doing any of this. It's just this, boom, boom, right? And it's just this, right? Boom, boom, right? Or just this, boom, boom.
You're trying to
Little
find that brief
little
moment in time.
stuff, right?
Yep.
To the upside to whatever, right? But just these little slivers of the actual move,
Yep.
right? Not the big ones, but little pieces, right? Overall, it adds up, right? Like
Yep.
that's the
And
thing. And
this feeds back to exactly what Benjamin Graham was talking about, is that we get so stuck in this moment of we want to financially change our lives in this one trade, right?
dude, right? Like everybody's trying to take this whole move,
Yeah, right.
right? Like no, 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 no,
I
no,
got this. Hold my
can't do
beer.
that, right? It
Right,
just this
right.
little bit, right? And,
Yes.
and we're just doing just this little bit over and over and over.
Yep.
But swinging for like that big move, yeah. Like I mean, a decade ago, or even
Right.
at the pandemic, right? Bottom of the pandemic. That's they did get that, and that's part of oops part of what people are still kind of being challenged with. I think a lot of that is over for the most part,
Yeah.
actually, right? But yeah, there was this, huge, like,
Rally.
throw 3 or 4 letters
Literally a
together
rally. Yeah.
and you're a genius, like
Right.
absolute genius.
Right.
But if you're doing that over here or over here, it's just not how it's going to work, right? All
Right.
we're doing is we're taking this little move, right? Little
Hmm.
move here, right? Or
And not even that, because
little
you're
move.
looking at a daily, that's a swing trade, right? You're looking at a daily chart. You get into
Yeah,
intraday, right? And so you're only taking that one candle and
yeah.
dissecting that one
Like
candle.
today, like the only reason I was bullish today is because we opened above, or we started trading really above this 358. That's it, right?
Mhm.
Or yesterday above this 382. That's it. Just boom, boom, right? And I think that at this point, 3 months after the top, or however 6 months, right? Like
Mhm.
people are starting to, but it it could be, that we do have a little bit more.
Mhm.
It's just I hope that people remember to sell this time.
Yes, yes. And
I
and
hope
that's
I
exactly
hope
it.
they remember to sell.
So if you go to the slide, I want to call this out because uh,
This one?
yes. So this is something that casinos have done for a long time, is that back in the day when casinos were people were making lots of money hand over fist, just like a rally out of a pandemic in the stock market, on slot machines and whatnot. And there was a time where people got involved that recognized the psychology of people, and this is where slot machines started to kind of get tweaked a little bit. When people get addicted to that thought, the gambling, right, the thought of making money to change your life, they're willing to put more on the line. And so what
Yeah.
happened is, right, in casinos, you can track the money of an individual person where they come in, you give them a win, you give them a little taste, right? And that dopamine rush. Well, they start losing. When they start losing and they're below even now, it triggers a part of the brain that this is the hopium, right? This is like, I can do this, I can get back in. So after a period of time of losing, they all of a sudden give them a win. And maybe they'll give them a couple wins. And those wins will start to bring them back up to break even. But they just shy, they'll, doesn't let them break even, right? And they'll start losing again. So the dopamine rush, bringing them back in to think, okay, I'm getting out of this, right? I'm going to break even and then I'm going to walk out the door,
Yeah.
right? Well, all of a sudden they start losing again. Triggers the brain. Okay, what the hell? Maybe they're throwing more money in. Maybe they're reeling back a little bit, and then they're gonna have one hard hit right when they start getting on that rally. So this cycle happens over and over and over again until the person missed the feed. The market has done the same thing. So when a market recognizes, and this is now where we start looking at max pain, right? Max pain levels. When you start looking at the GEX, the GEX, right? The gamma exposure, all these things, right? This is the market makers where they are starting to recognize, okay, how do I collect the most capital, retain the most capital? And so they look at the options market and they can see, okay, let's give people a little food, right? Let's get them in it where they think they're making money, but they know over time they have the power and ability to actually change direction of something, right? And so then you'll start losing. Now, you guys, we got to remember, when you're up, you're up. You make money and you get out. Now, everybody has a different tolerance, right? Everybody has a different financial standpoint. Their account looks different. Sometimes you can't get in on every trade because maybe you're stuck with pattern day trading. Get that. So you just want to be mindful of, okay, are you going to be more of a swing trader for now? Maybe here and there you do a day trade or two, right? So you can get your account over 25. Once you get your account over 25 grand, even then, I would say still be cautious because you can very quickly drop below 25 grand, right?
Very quickly.
Very quickly, right? And so this is portion control, and you're managing it. And once you get to a comfortable level, right, then maybe you get a little more, that risk tolerance is developed. You know what you're doing, right? You like to think you know what you're doing, but always remember there is a mindset and a mentality and a psychology behind this stuff. And this is, again, algorithmic trading, right? There are programs that are being told what to do. You just got to make sure you're riding that momentum and you get out, right? Because it can crush you. That up and down, and what you're looking there in that picture that's actually one day. In one day, that is what happened to something in one day. So you had your ups and downs where people were rug pulling left and right because they thought, okay, I'm making my money back, I'm going to go back in heavier, and then all of a sudden rug pull. Okay, so if you want to jump to the next slide, this is kind of the big thing about what you want to be aware of when you take a step into trading, and you maybe want to do this as a full time, right? I will say there are things you need to think about: health insurance, car insurance, mortgage or rent, having money in your bank account, paying your bills, right? Being able to live, right? These are the things you want to think about if you're going on this path. But the biggest thing, the biggest advantage you can give yourself is developing a trading plan. Like that is I put this as number one because this needs to be your Bible. This needs to be your rule of life for trading, right? And you want to stick to that because if you do that, you can't go wrong, right? Being a good trader is making money. Being a great trader is reducing your losses, right?
Yep.
And that's really what it's about. Is I see people all the time that are ripping, maybe they'll make a 300% gain, right? But they have many more 50% losses out there. You pay yourself like 3K a year and expense a ton of things. Sorry, a little question coming up.
Oh, Can your
Yeah,
LLC make money and you pay like a pass through? Oh, 30K a year.
pass
Yeah,
through. Yeah,
it's
pass-throughs.
possible. You still get taxed though, is what I would
Mhm.
say, right? And it's not. And if you're trying to live out of your SLC, out of your company's funds,
Right.
that
You don't
gets a
want to, you
little,
wouldn't want to do it through an
it's a little
LLC.
dicey.
Yeah, you wouldn't want to do it because LLCs are tax traps. So you want to you do an S corp, right? LLC would actually own the S corps, and you would get paid through an S corp as like a W-2 employee. And if you want to, and I know this will go off into a tangent. This is the stuff that we do of Money Vikings, right? So
Yeah,
it's like you would be a minimum wage employee, but your company would pay for your card, pay for your cell phone, your gas, mileage, right? Stuff like that. That's
man, I
all.
haven't even set that up. I should probably do that,
You do
Jake.
need to do that because
I
it's a
need to
great
do that
way,
for sure.
because this is actually one of the ways you take advantage of taxes is being a minimum wage employee, but your company pays for all your expenses, right?
Yeah,
Your
yeah,
company owns your car, your company owns your house and whatnot. So yeah, there's great ways. And health insurance, yeah, well, when you get to a certain age, it's pretty important to have health insurance. And for
just
me,
a little.
a little bit, right? But me in
Yeah,
particular, 3 kids, special needs. We do therapy every day, and it's covered through health insurance, right?
yeah,
So it's important. But I will say, when you can take advantage of a business that you're getting paid minimum wage, you can actually qualify for things that will pay for your health insurance, right? Covered,
yeah.
I'm California, cover
Yep.
California. I be a minimum wage employee on paper, and get little stipends, and have pretty much the government pay for my health insurance fully,
Yeah, I need.
right?
I really need to get this set up.
Do
So
it.
so in this
Yeah.
trade plan, right? So your steps to success. I was just typing, and um, I don't even remember where I got it, but I had a. I think so. When you're coming into trading, and we started talking about trade plans last week, right? And
Yep.
then next week, Jesse's going to come in. I think one of the things, actually, Ace had said it too. Like one of the things that is super critical in a trade plan is being able to assess yourself.
Yes.
I'm going to pull up what he sent.
And that's the second step. I put in the critical step is that it's paper trading. It's testing your trading plan.
Yeah.
That is, I consider the critical step in the process to being successful, is that you may develop a trading plan, and your trading plan may be too loose, right? Maybe you're giving yourself too much slack in the reins, and you could lose 25%, and you figure like, oh, just a little more because I'm going to make this all back, and then all of a sudden you're just negative all the time,
Right.
right?
Right.
So it's
I
paper
think,
trading it.
yeah. So that's assessing your trading system, right?
Mhm. Yep.
And we're kind of down here. So for me and for most of the bot traders, we'll call them, our way of keeping our own track records is legitimately, that's all you're looking at in the servers is
Yeah.
our trade trackers. That's literally it. And it's no different. Like if you're going to track yourself, you very much want to do the same thing. Like, if you have, your server, or you can spin up your own server and just kind of like type out, BTO blah. But the difference is that, we'll usually have some kind of notes, and you want to have like, I'm doing this because, right? Like this was the logic, right? He has this rules and guidelines. And I think,
That's a trade plan. Yeah.
this is I had another one actually here, and I just threw it on notes. So there's these affirmations,
Yeah.
if you will. Have you set anything like this up, right? Like, so once you have your system, right? Like I'm only going to trade my specific setups. And I think, you had mentioned it somewhere. Don't even know if they're trading their plan. Yeah. Do I know I'm trading my plan, right? Like, do I have my trading price action system, right? Like we've essentially given it to you. But you can, tie up your own, right? Like, am I a range trader, right? Am I a breakout trader, or do I trade all of these? But that's fine. Every time you do take a trade, you have to note, well, it's because this, that, or the other, right?
Yep.
I think
it's it's the risk tolerance, right? We need to recognize it in ourselves. Is that because some of us can't stomach trading in like a 5-minute window, right? The fast movements, and
you have to know that, right?
you have to
And
know
so
that.
like,
Absolutely.
if you know that about yourself, you can't trade specific times, right? Like you can only trade, specific hours, and you can't trade short duration, contracts and things like that. And you have to have an idea of like, this is my target in that case. And then also really, what is if you don't have a target, that's fine. If you have a stop, right? Like if your let's say daily affirmation when I start trading is I will cut my losses quickly when I'm wrong. You have to have that defined, right? And I think, Aces was good because he did say like, if you have to define it, just saying it isn't actually good enough, right? You have to say
the criteria inside of that.
Is this my criteria, right? So if I have a 35%, criteria, cool. Write that down, and this is it, right? Will I allow myself to average down, right? And how many times, right? And only if the trade logic still stands, right? I did this today, right, on freaking Facebook, Meta, and it was super similar, right? Like I have the same breakout, same breakout range, right, is where I am. And this is the bigger range. We had the smaller range already broken out, right? Bounced up off of it, and you can't be short here anymore. Like I don't even know if I was attempting to be short here or not, but once you're out of this range, which is very clear, right?
You want to get out of your short position.
Yeah. The range really goes all the way up to here. Right up here. And so like, to me, is this still a valid trade? Well, guess what? It totally is, all the way up to here. And, am I okay to add? Yeah, I am. Do I have a target? I have a very clear target in my head. It's this gap fill right here.
Yep.
That I think is glaringly obvious to most people. Set 175, right? And all I'm doing, I'm just trying to capture this one little blip of a move. Right there.
And I wouldn't even hold it all the way up to that 175, right? I would be not full position, I should say, right? You leave your runners and because maybe something happens where it breaks the 175, comes back as a support, but you have to recognize in yourself, like, okay, you've made so much money in this trade. Do you want to leave a runner to see what it does?
Yeah. And how much am I willing to risk on that runner, right? Like I take like 90% down, but this whole time that it's breaking out, right? As long as it's over this 171, right, give or take, like it's still a valid trade. It's very close to being invalidated, but that's where I want to be actually entering, right? Like as close as I can to being invalidated. And so like, to me, it's very, okay, if it does go below this, right, like tomorrow, I might be out right away. But if it goes below this 170, it's going back into this lower end of this range, right? Wherever this POC is. And then we're back to shorts, right? But until then, I'm not.
You're right.
And what's funny about this one is like the breakout is happening, right? Like the breakout's happening here.
You're watching it,
right? Boom, boom, trying, but not getting pushed up enough. Could this be a fake out? Yeah, for sure. It totally could be. But is it one right now? Not yet. Very close, but that's where I want to be really kind of like loading. It gets to those time, right? Time becomes a thing where I don't want to buy a ton of time. Like I'm not buying a month-long contract, right? No way. Because I just want this very next day, next move. And if I'm wrong on the timing, well, I don't want to be spending an extra, money so that I can buy myself more time. I want to spend as little as possible so that, my risk is as little as possible.
And that's the point, like people of understanding what your tolerance is, right? Because, there are people, here that probably want to do swing trading, right? And so
it's fun.
Yeah, it is, right? It's nice to be able to sit back. It's nice to be able to sit back because I can tell you, I've had a whopper of a loss that caused me to need to walk the world in thought, right, for a period of time. And I went off the radar for months because it was bad.
I think I remember that.
Yeah, it was bad.
But
it was really bad.
But I think those are the learning experiences, right? Like, and if people don't have those, like getting them from us is really like the whole purpose of this, right?
It's key.
And so like, I think maybe it was Tesla or something, but
Tesla was the one that just the other day did stupid chop. It was like around 11 o'clock or so.
oh yeah, this is that same. It's the same. So we're seeing the same range, right, on everything. And so like, and that's where I'm at. Like I see this range everywhere that we go. It's this 5-day consolidation, like on the indices across the board, right? Like, are we almost in breakout territory? Yeah. Like why I had a Tesla call today, same thing. It's like I'm holding. Just, nothing's invalidating. I'm not really stressing. I've already taken some profits. I got in late on the Meta, right? Like that's why. Had I gotten in earlier, that's fine. But I have to know that, yeah, I got in late, so I'm gonna have to be prepared to average down.
See, the thing with Tesla was that, sticking to my personal plan, I had actually bought some yesterday and bought some 695 calls, right?
Yep.
And I dumped them this morning within the first 10 minutes.
Oh yeah, good trade.
Because we're up, right? Good trade, great trade. And I did not kick myself, even though as high as Tesla went today, right?
Absolutely.
Why?
You want to see?
Right? Why did I not do that? Because I made money. I can't be mad.
Yes, this is the trader mentality, right? Yes. Worst situation, right? Like, and it's funny is that when traders, I'll see this all the time, like, oh, it ran to XYZ. Like, who cares?
Oh, I could have.
Like, it has nothing to do with anything, right? Like, look at this is what just the other day, Moderna, right?
Yep.
On the 5th, I opened a swing, right? 160 call for, it was like 245 at the close. And I'm like, I'm planning, right? It's a short dated car. I don't want to spend a lot, right? I see it bouncing in the morning, right? I'm going to plan on closing it in the morning. That was my plan. I have some confluence on the sectors, et cetera. And, this is that day right here. And I think to your point, right? Like I know where it's trading right now, but am I FOMOing back in? No, right? So I opened, and what was wild, look at this. This is the first 30 minutes. It wicked down to like $100 it was stupid contract.
This is the psychology of it, right?
Yeah. So it was just, do I freak out? If I was over positioned, to your point, right, I probably would have freaked out, right? But I know, like, hey, look, I know it's higher risk. I kind of want that from a shorter dated perspective, but because I'm not over leveraging or over positioning or putting more than my trade plan accounts for, I'm not worried about this, right? Like I planned on taking in the morning, and I took it like basically right here, to be fair. And that, that was
setting the rules for yourself, right?
That was it, right? Yep. That's all I had planned. I think it took it somewhere around here, maybe. Yep. And like, if you held at some point this thing, I don't know where it went. I feel like, oh, maybe it was this.
So Ryan just made a comment. So Ryan, I mean, that's the thing is, Jerry, he one of his quotes, I can't remember the guy who said it, but the one of the biggest things for his success as a trader was the sitting and the waiting, right? Because sometimes we do get so ahead of ourselves and we do react, and that's by human nature, right? We tend to be, instead of proactive, more reactive. Oh yeah, that ripped, dude.
So here we are. Reactive. I could be crying and saying, "Oh, I sold, this at 285." Like, I stuck to my plan, is what I did. Right? I stuck to my plan. I couldn't even tell you what it's trading at. I'm sure it should be trading over $1,000 just because it's over $10, right? But I'm not FOMOing in it either. Right. And I don't have a clean opening. Do I want to open again here? I could have opened here, but I didn't. And it is what it is. So I had other things I was watching, and missed the trade. Oh, well.
This is food for thought for people. And I know this isn't necessarily reality, right?
Oh yeah. Like, this is what it is. It was open here. That was the plan.
That drop is where you're like,
drop. Yeah. It went to $1. I know it did, because I saw it and I was like, oh, I think people
shorting in the covering.
Yeah. They might be freaking out. Right. But you would have had another clean exit right here too. Anyways. But That's what it is. It's just, I want to take this little portion of the move, and it's literally can be this small, right?
Yep.
That's your move.
The moment.
And then you move on until you find the next one. If
Right.
you're watching it, great, but there's always, and if not, oh well, because there's always a next one.
There always
right?
is. Every day. This is back to it.
That's
It's
the
like,
FOMO, right?
yeah, people, we have
It's
to
like
understand.
number 2 affirmation, right? So
Yeah.
here's your affirmation. I will not chase the open.
Yeah.
I will not FOMO. If you know that that's one of your things, right? Write it down,
Yeah.
right?
Yeah.
Write it down. Daily, you want to read your list, that's fine. However you need to do it, right? This, like, I will buy appropriate sizes for my account. You need to know what that is.
Mhm.
Every day, actually, that number is going to change, right? Because either your account's growing or it's shrinking, but it's
Yep.
never staying the same. And you can't, that's probably the biggest, what, not the biggest, but one of the other large hurdles, you know, when people start trading, it's hard to say, oh, okay, do I want to have a $500 position size, right? Or a $100 position size? Well,
Right.
maybe if you started out with $1,000 account, great. But at a $2,000 account, you know, $200 is fine. If
Mhm.
you blow $1,000 though, you need to make that mental note, boom, adjust. I can no longer be having $200 position size. And,
Right.
and switching that live is actually, you know, it's not easy.
Training wheels, right? Put your training wheels
Yeah.
back on. That's it.
Yeah. Yeah.
And
So
and that's the thing is what I want to say real quick is that this isn't necessarily everybody's reality, but think about this: $1,000 is potentially 10 trades away from $1 million. Okay, so think
Yep.
1,000 is 10 trades away from $1 million. If you could double your money on every trade, now that could be possible if you had a very specific setup that you knew every time a stock or a specific ticker or just something reacts in a certain way, and you had a trade set up for that, right? So
Yeah.
$1,000 duplicating, doubling it every time, but granted, you're 100% in on that, 10 trades away from $1 million, right? So just knowing that if you are looking for a particular setup and you know you're right, I'm not an advocate for going 100% in on it, but you can push your level a little bit to be able to throw a little more into that trade because you have that confidence that it's going to do. But you also need to know that
You have to know how well of a trader you are, right? You have
and
to know
how to mitigate, right? So if
Yep.
it does go wrong, how do you then reduce those losses? How do you recognize, like to your point here that you have up on your affirmations is like, okay, so how do I cut my losses quickly? Number 4. So it's kind of like we as humans need to also understand that we can be wrong, and it's a very hard thing for us, especially if you have a type A personality.
Yeah.
You need to recognize you can be wrong, and you are wrong sometimes, right? And so it's like,
Yeah.
okay, if I'm wrong, how do I then recover out of that? Learn my lesson, lick my wounds, and recognize, okay, maybe I overstepped. Right?
You know, I was watching, I think yesterday, right? I know that I was starting to be wrong because I was short, and I had to me, I have to get up and go walk away for an hour or so at least and come back and reset. And I think one of the guys we traded with was, I think it was Ace, right? Like he was talking to Ace today, or not talking, but like Ace walked super early today, right? Like, and I'm looking at his note, and like this is just such a pro, right? Like, okay, 8:30, right? He doubled down per his plan. Okay, cool, right? I get it, and he took the L, and he's recognizing, like, disconnected from the market. I think he's like, I don't know what he's saying, but he's been on such a hot streak.
Yeah.
You know, that's one of the things, like if you're on this huge hot streak, it can get really easy to feel like you're invincible.
Euphoria.
You know?
Yep.
Or feel like
complacent,
you're invincible.
Yeah.
And so that's, I'm looking at that and I'm like, dude, that dude is like clearly recognizing, hey, look, mental pause, right? It's your emotions that you need to be aware of. It's not even your bank account, right? Any euphoria or any just over fear, right? Overly fearful. Or hesitant.
Stop thinking that you're betting on your favorite sports team, right? And I think that's a big thing nowadays, is that especially with the pandemic, right? We see this all the time. GameStop, right?
Yep.
We see,
Absolutely.
AMC, MVIS. I was part of that whole crowd, right? Is
Yeah.
that people, they're the greatest. This is the best. We got this. We're going to the moon. And it's like, and then if somebody actually tries to sprinkle in some reality,
Yeah.
they're all of a sudden
It's got to
teased
be
and
this, right? Like,
right.
yeah,
Yes.
if you're, it's being self-aware of your mental
Mm-hmm.
state. Am I too happy?
Mm-hmm.
That's for me, that's the one. Like, I have to know, like, if I'm too exuberant, or like I'm too much of a cheerleader right now, dude, I
Mm-hmm.
gotta walk away.
Yep.
Right? Like, I just gotta walk away. Just what has to happen. Um,
Yep.
and because my worst days come right after my best days.
Yep.
Right? And I think that's true for so many people. And it's one thing to say, hey, like, okay, right, you could say it, but to be able to actually take that break and reset, walk away,
Yep.
and come back either the next day or whatever. I mean, that's a huge win, and that's a win that should really be like celebrated to me,
Yeah,
right?
absolutely. And I'm glad you say that word celebrated, right? Is that
Yeah,
this is one of the biggest things, is that when you've been doing so well, it is okay to treat yourself. It is
yeah,
okay to treat yourself when you're doing been so successful and you're making money that you didn't have before. It is okay to occasionally splurge. Don't overdo it, right? And
yep,
this is where social media plays a big role. A lot of these people on Twitter and Instagram and whatnot, flashing off their Rolexes on their private plane and their Bentleys, and it's like, okay, you're leading people down a path to think like it's the image, right?
yeah,
And so, my big thing on kind of the one of the fourth steps of success is that, you know, play with house money. When you have your seed money that you've initially worked, you've earned that money to put into the market and play it. Once you've gotten to a point where you have made more than that, put that back in your bank account. So now you're playing with house money. Yeah, it's still going to hurt if you lose money. It's still going to have, there's going to be some little depressed feelings if you lose that. But, you know,
yeah, yeah,
at
Ariel, that's
least
TikTok for
you have your
sure.
money. Oh yeah, TikTok, right?
Yeah,
But at least you have your money that you initially started with, and you can walk away at the end of the day and say, "Hey, I played the game. I put put my bet on black, right? And I lost." And so, but it wasn't your actual money you walked in the casino with. So just remember that the biggest thing is make yourself whole at least, and then at some point treat yourself for doing well and actually staying calm and cool and collected and weathering these storms and coming out on top, right? And that's kind of the big thing here, is that we want our lives to change quickly and in an instant. And we see these Wall Street bet stories and whatnot, where somebody's flashing that they made millions of dollars in one trade. I I
yeah,
have
that's
stories.
the
I have
not
stories of that
sustainable
too,
stuff.
right? Yeah,
Yeah,
but it's not. It's you know, it's you got to detach from that. It's your own game that you're playing. You're playing it for yourself, and you got to win it for yourself. It's not for
yeah,
somebody else, right? And you have to be clear about, what am I ultimately here to do? Am I trying to do something to better my life, my family's life, and have more stability? Okay, then what does that look like to you? Am I is my goal to make, I don't know, $2,000 a week in the market? Okay, what do you have to do to get there? When you do get there, stay to it, stick to it,
yeah,
consistently do it. And then at some point in time, this all compounds, right? This all compounds, and it gets to a point where you're like, okay, I want to make 5,000 a week, right? But when you do that, are you keeping that 5,000? Are you setting a limit like, okay, if I lose, and this is where I've set for myself, if I've lost at the end of the week 5% of my total account value, I will take a week off, right? My goal, I would love to make 5% of my total account value by the end of the week, right? But that's a percentage. It looks different. So if I'm looking at a dollar, do I want to, if I want to make a couple $1,000s a week, I want to make $5,000 a week, I want to supplement the livelihood of my family. And if I'm shooting that, okay, on a month, at the end of the month, I want to have X thousands of dollars that I've made in the market because that supports the livelihood of my family. Then everything above that is just icing on the cake, right?
Yeah.
That's kind of where you want to get the headspace. You want to get to that.
I like it, dude.
Yeah.
Super, super important. Yeah, I think the only way that like you can really become that, I mean, you're just doing it for the living, right? Like, and putting this trade plan together. There was one.
And this is in depth, right? What he has here, you
It
guys,
is.
I mean,
Well,
put something.
I mean,
It can be sticky notes that are bullet points, but you have to have it visually in front of you when you're
yeah,
doing it, because you have to be able to look up from the screen and say like, okay, man, I have my rule here and I'm breaking my rule right now. I need to stop, right? You need to have this visually in place because you need to stick to it. And then over time, you massage it. Maybe you rework it because you're doing so well. But don't get aggressive. Don't get cocky and overexpose yourself.
yeah. There was have you ever heard this term risk of ruin before?
Yeah, I have.
So that's a real
Yep.
calculation, right?
Yep.
Like it's do you know how it's calculated, or have you ever done that?
I haven't done the calculation, but I know there are actual numbers behind it.
Yeah, I was just trying to find one because I actually haven't done that. I just think it'd be such a awesome, maybe Jesse will have like actually run the calculation, but this is like such an important thing, right?
Yep.
Like there are actual calculators out there that you can plug numbers into. This is my bankroll. This is my average win rate. This is how much I'm going to risk, and it can tell you what your risk of ruin needs to be. Like how much can you really like enter into each position size before you're dead in the water,
Yeah.
right? And
Right.
and what your stop has to be. But yeah, I didn't prep that. Eventually, I think that would be. I'll ask Jesse if he has one, but that's I just like such a huge.
It's important to know these little values and numbers, right? Because you can recognize when you're approaching some of that stuff,
Yeah,
and then you kind of be cautious.
yeah,
You
for
know,
sure.
I'll tell you,
I
for me, I will not have more than $5,000 in one position at a time, and that is a rule that I stick to. Whether something looks as juicy as ever, I won't do it.
Yeah, I was just trying to find like this is even like a blackjack site, right? There's a risk of
Yeah.
ruin calculation, right? How
Yeah.
much? Here's your bankroll, right? How much can you put, or what do you need to have as your stop based on your P&L, right? Like your average win rate,
Right.
and what do you have to have, right? 7,300, then your risk of ruin 6.3% is where you based on your average winning hand
Right.
win rate, right? 6.3%. Like it's a hard number. I wish I had it. We'll find it for you guys for sure. I think it's definitely something worth diving into.
So one thing you guys got to remember is this is a from the Intelligent Investor, right?
Ah,
So an intelligent investor is a realist who sells to an optimist and buys from the pessimist, right? So we're finding those opportunities in between. We're trying to find those moments to make money. And so
yeah, I like that.
just be cautious and just know how to recognize what the market's doing. Jason does a great job of teaching like the patterns and incorporating the strat right into everything, and following that lead of recognizing the patterns and the formations, learning those things in those moments, and that will tell you in itself what the market's doing, will tell you the psychology and the sentiment of the market as well. You see that with volume and price. And when you can see that, you will find your opportunities to buy from the pessimist, right? And you're selling to the optimist. You're taking advantage of a situation where people are reacting. You know that, okay, a top is coming soon. I need to get out of my position because I don't want to be the one left holding the bag. Right.
Yep.
So very
Love
important
it.
stuff.
Yeah, just that little piece, right? Throw your list together, whatever you need to say to yourself every day, right?
Yeah.
And then start, it's got to be, it has to have a plan, right? Like if you're not actually running a plan, there is no way to take emotion out of it,
Yes.
right? Because if you don't have a written trade plan, right, where you meaning where you have a hard, this is how much I can risk for a trade, and this
Mhm.
is where I'm going to be taking profits, like, and this is my system that I'm going to be trading. Like, without those things, there is like zero possibility of you actually removing emotion from
Yep.
trading, right? And
And
you're literally setting yourself up like for failure.
yeah, and here's the thing is, guys, don't be jealous or envious of another person, right? We are all
Yeah,
on our own journey. Everybody again is at their at a
I
different
saw this
level.
one. It was funny. I will not FOMO into another trader's ideas or alerts,
Yes,
right?
right.
Like
Because
that is like, and we even have it in our service, like, like a little automated pop up now. You know, what does it say? It's like, hey, here are your expectations, right? Like, one,
right,
enters, exits. You have to have your own expectations, right? You have
right.
to do your own stuff before executing a trade. It's funny because the newest generation, some of them learned by what they call like shadow trading,
Mm-hmm.
I guess is this term. You guys
Yep.
will know better than me. But like, that didn't exist when Bob and I started trading. It did not exist.
Wall
So
Street
like,
Journal, dude. I mean, you
yeah,
call your brokerage and yeah.
even like relating to that logic is like very foreign to me.
Yeah.
It's funny too. You can look at any of the traders, like, we're not like, these guys aren't, well, there are many out there. So the ones that I hang with, like, I know like nobody's really looking at each other's stuff unless
Yeah.
we like can't find our own trade. But
Right.
and even then, it's really just, we're using it for, like, just ideas. And every time
A reference, yeah.
we're referencing, right?
Yep.
What do they see, right? Can I see the same thing? Okay,
Yep.
well, there's a million of those triggers, right? Like, just like you were saying, like, there's so many little entries. If this is a one day, right? Maybe
Mm-hmm.
somebody enters up here. Well, dude, there's gonna be this entry,
There's
another time, right?
yeah.
We're just looking for the next one,
It's
and
like not
every time.
every day there's a new opportunity, and just in even within a day there are new opportunities throughout the day, right?
Yeah,
And so it's like you don't it's
yeah.
just staying patient. Just be
So I
patient.
forget about whatever their entry is, whatever Jason's or Paper's entry is, right? Or Bob's entry, whoever,
Yeah.
right? Forget about that. Look at the chart and say, like, here's my entry. Okay, maybe he entered up here, right? And maybe it's
Mhm.
down here. Do I still think I can press it? Well, I wouldn't say that people should feel like they're chasing, right? Unless it's like, it doesn't matter, right? If it's still trending, then
Mhm.
it's still trending and it's still valid.
Right.
So, I mean, that's all you're looking for.
Change to a line chart. There's nothing wrong with that. I know people that trade off line charts instead of
Oh,
candle
that's
charts.
wild.
I know,
That's
it's crazy.
wild.
It's crazy. But the thing is, your play develops over a longer
The
period of time.
Helsinki, right?
Yeah, right.
Helsinki, Haikanashi.
Right,
Huh.
Haganashi. No,
Yeah,
your trade develops over a different time frame because
yeah,
it needs to close. The
for sure.
time frame needs to close. And so if that works for you, that works for you. But you need to develop your routine, the trade plan. You need to know what setup is comfortable for you. If somebody else has an idea, don't just follow their lead on that idea. Understand the idea. If it's working for them, if it is something that works for you, understand it, why it works, and have that aha moment. Because maybe, I'm telling you, I've had a few different variations of technical indicators that I've followed over the years,
Yep,
and they validate, right? And you're constantly evolving. I have constantly evolved
constantly.
and changed, right?
Yeah,
And that's what it is. But it's my personal thing, and I try teaching it to people, but it doesn't always click. And so
yeah. No, nobody can trade like you
nobody
trade
can, right,
or how I trade. Everyone, there's no one right way, but like,
right.
everyone needs to own it, right?
Yep,
And
yep,
so,
absolutely.
so yeah, so next week we'll go through. We'll bring Jesse in, who's our futures trader. Like, he's a funded trader, and right, and I, funded traders, or he's from the forex space, right? And so,
Mhm.
I'm going to ask him to kind of walk through back testing
Yep.
and doing that actual self assessment. And so at this point, you guys have seen, what does a trade plan look like? I would implore you, go make your own template. Tom's saying there's risk of ruin calculators. We may or may not get to that, right? Maybe we get to do it on the next series. But yeah, that calculating that risk, like, how many trades can I take with this bankroll before I go bust, right?
Yep.
And
Yep.
what does my stop loss need to be in order to get there, right? If I have a
Yep.
50% win rate, all right, well, I can take, 5 trades with a 10, at 10% on my port and have a 35%, win rate, or 35%, whatever. Yeah, my forex. Yeah, I've seen this one. This is, I don't know how to do the, um, anyways, yeah, like if you have, let's say 75, right? And I want to do like an average 50% with, I don't know, 35% loss, right? If 5 loss level percent. I don't know. Yeah, this is where I get lost. Loss level.
I probably do like a 5%.
What is that?
I think it's a total account.
Total account loss
Maybe
level.
go higher.
Yeah, this is where like I don't know this
Yeah, I don't know.
calculation. How much are you willing to lose? Oh, 35, right? Average loss.
Oh, okay. The average lot. Okay,
Got
okay. Yep.
This should be in dollars, right?
Yeah. Yep. Those are dollar amounts, the top ones. So average
Yeah, okay, so it's
win,
$100
yeah.
trade, let's say. Yeah, that's not gonna work.
I think because the top one is your average win is like $100. Your average loss is $20, right?
Yeah, like okay, so my average win, I don't know.
Yeah, there you go. Try and then just hit calculate. I don't
I
know.
don't know what that rate is.
I don't know.
Yeah. So I want somebody like maybe somebody else knows, but I'm not the expert on this calculation. I
Yeah.
think there's a lot.
But I've heard of it.
Yeah, I think it's something that could be cool. So anyways, I appreciate you, dude, coming in.
Absolutely, man. It's
Coming up
great.
on time. I just, like the journey of like, hey, what am I thinking about as I'm trading from a day-to-day perspective? Any little nuggets? I think one thing that is very clear in this conversation, right, is that, the trading stuff, even for you as you're doing this transition, leaving a W-2 job to becoming like this real, not that you weren't, right? Like you have already been financially free.
Yeah,
What-
but an investor too, right? I mean, it's
but you've been financially free for quite some time before you're able to even think about taking that leap. I think is the biggest thing, right? How well capitalized are you, right? If you're really thinking about like, there's all kinds of other stuff.
Knowing your net worth, it's huge. People should know your net worth. Yeah, there's calculators out there for it.
Yeah, and if you guys want, like, it's moneyvikings.com, right?
Yep.
Yeah, head over to the site, check it out. There's all kinds of stuff that they have that will set you up for that longer term financial freedom in terms of like diversifying your wealth, because that is a mandatory, right? Like it's not just trading. There's not always going to be good days. You're going to have a string of really nasty losses, right? So these guys have a ton of resources for you, in terms of
and don't trade every day, guys. That's the other thing is you have to learn the whole point of this is that for me, and like this is my personal thing, is that I ultimately only want to be trading 1, 2, maybe 3 days a week, and 3 days is pushing it because I want that freedom of life, right?
Yeah.
This is the treat to myself, is that I want my life. And so just remember that you don't need to trade every day, even though you can make a killing. Don't do it. You'll burn yourself out. You'll make mistakes. And so it's like, recognize that. Just breathe.
Absolutely. So stack it. Practice now while you're young, right? While you're learning. I mean, the purpose of everything that we do is so that you guys don't have to blow up actual accounts with real money before you actually take a leap, right? Like use us. This is educating yourself in terms of like everything.
And I'm around, so I'm in Paper Gains Discord, so you guys don't hesitate to ask a question, reach out, and
at Twitter,
outside,
right? Your guys' Twitter is like crazy busy. I don't know what you do.
It's just busy, dude. It's just a lot. It's a lot.
Yeah, so, I don't know how you do that, but it's like at moneyvikings.com.
Yep. And so just hit us up. Any questions?
At Money Vikings, At
Money Vikings, and just hit us up. And again, it's stuff even outside of options trading. It's my brother Greg is phenomenal at due diligence and research on companies. He loves REITs. Like if you're looking,
he's the real estate guy.
He's a real estate guy.
He's the real estate guy for sure.
And if it's even investing questions, it's not just trading, let us know. We're more than happy to help out, because the big thing is it's about a movement, right? We're trying to, you need to take control of your money. and do better for your life. And that's what we're all about. So,
Absolutely. Yeah. And they do have an options trader, Jerry, who I am actually a fan of, but he's a credit spread guy, right? So it's a very different mentality than what you guys will ever see in Discord, that I've ever seen in Discord. But
Yep.
it's the passive stuff.
passive income, real estate.
Yeah.
That's we're big on that. That's what I actually do a lot of outside of is owning property.
Yeah.
Most millionaires and billionaires in the world have been made through real estate, and it's true passive income. So there's other aspects of this, and if the trading is feeding you to that next level, then that's what it's for, you know, and you got to treat it as such. And so Ariel had a question. So Ariel, you know, the best way to think about it is you have to look at the money you put in, you have to be willing to part ways with. That's how you have to think about it. I'm willing to lose this money today because I could, right? It is a possibility. So doesn't mean you are, but you have to be like, okay, if I have $5,000 in my savings account, what would I be okay losing today if I made a mistake? But you want to try to paper trade before that point, because ideally you don't want to lose it, right? And so it's like you have to have the mindset of like, if I lost this money today, it wouldn't ruin my life or hurt, you know, financially in my position, right? So that's a self-reflection.
If you ever break any sweat at all in any trade, you're over leveraged.
Yes.
Like that's it. Like if you get a single butterfly in your stomach, sorry, you're doing something wrong.
Not today, Satan.
Right. Not today, Satan. Yeah. Like very emotionless, very robotic, right? Once it's, you know,
be a capitalist, right?
It's all about the system, right? We'll have earnings season kicking off actually at the end of this month too.
Yeah.
Are you joining, dude? Are you going to do this one?
Okay. Yeah, I will.
Bring Jerry. But yeah,
bring Jerry.
Yeah, you guys will see, like we'll have, like, it's a very hardened system. It's a yes, no, yes, no, yes, no. Yep. Do a scan, right? Screen your results, right? Does it qualify? Yes or no? Does it qualify? Yes or no? Right? There's no maybes in trading. Actually, Ace said that, and that stuck, right? Like that. Well, it's true. There are no maybes. Either something qualifies or it does not. And if you're in the air, we'll get out of the trade and wait for it to be qualified, right? And like every single box is checked, and then you follow your risk plan for trading, and that's it, right? And it just becomes this, like, you know, nonchalant, like, okay, at a certain point, you're going to get so good at it. You'll have, like, your positions might be 10 grand at a time, right? Like that's typical, but you know, it doesn't start there. It can roll into that very quickly.
It gets there. Yeah.
That's very quickly it gets there, but only if you're disciplined enough to have this setup and some kind of system, right?
Absolutely.
Cool. I appreciate it, man.
Yeah.
Always a pleasure.
Thank you. Yeah, absolutely.